Real estate stocks are popular with investors because of the juicy dividends they pay out to shareholders. And our guest this morning has trounced the major indices by investing primarily in Canadian real estate, equity, and debt securities. Jeffrey Olin is the former head of investment banking at Desjardins. Now, he left Desjardins in 2008 to run Vision Capital, a company that characterizes as a hybrid of private equity and a hedge fund. We're happy to have you here for the rest of this half hour.
Good morning.
Give us, okay, so you were in investment banking. You were working directly with real estate companies, right?
Indeed. Although it's key to mention at the outset, our fund is managed by two co-portfolio managers, and my partner, Frank Mayer, who's vice chairman of our company, or chairman of our company, formerly vice chairman at Desjardins, has been top-ranked real estate analyst for 35 years. So it's a combination of our skill sets that I think has been particularly salient to our outperformance.
What do you like most about the real estate sector? What's the sexy part of this business that you know you can make money with?
Well, we focus primarily in Canada and primarily in publicly traded real estate debt and equity. And the reason that we quit our jobs, and we brought 60 years of combined experience to Vision Capital, is that consistently we have found inefficiencies in the pricing of real estate securities. And it's because of those inefficiencies that we've been able to, being very focused on what we do, take advantage of them, and has driven our outperformance.
Okay. Now, because this is an educational half hour here, and there are a lot of people who are watching and will watch this interview again on our website, characterize the inefficiencies. What do you mean by inefficiencies?
Inefficiencies meaning that often, to varying degrees at various market cycles, the pricing of real estate securities is either too high or too low, in our opinion, relative to where they should be trading.
So you have metrics that you use to calculate what the value should be?
Indeed. And our primary metric in that regard is net asset value. So a lot of investors, a lot of analysts focus mostly on cash flow multiples analogous to earnings in a more traditional non-real estate company, whereas we look at the underlying value of the bricks and sticks, the real estate itself. And I would also note that we don't do it on a static basis. We like to look forward where we think net asset value is going to be 12 months and 24 months. And again, I think that has been quite instructive as to our outperformance. Okay,
and we're going to look at a graph of your performance here. Is it not risky to be focusing on such a small group, small area?
Well, we would argue the opposite. We would argue that focus and that expertise has enabled us to differentiate throughout various market cycles outperformers.
Mm-hmm. Okay, so when you buy a stock, what is the typical holding period?
It varies, but we tend to be longer-term thinkers and longer-term investors. And while we do some trading, we're not fast traders. We look at situations that, and our fund is structured accordingly to allow us to look at situations that we think will outperform over a 12-month to 36-month period.
Okay. It's interesting to me that we're talking about Canadian real estate stocks, small group, and the pricing obviously is really out of whack. Is this because there's not enough analyst coverage?
There are a fair number of analysts now, more so certainly than there were a decade ago. But the analysts tend to focus on names that either have a lot of trading commission revenue or corporate finance opportunities, and often high-quality names, whether they be large capitalization or small capitalization names, get ignored, and there's a lot of overlap in the analyst coverage. And you know, Frank and I have been around a long time. We know the management teams. We often know the properties. We understand their strategies. And Canada, is, as you know, is very much a country of regions. So what is happening in Halifax may be different than happening in Calgary. And we try to take advantage of our analysis of those situations.
Very good point. Would you ever buy actual property, actual real estate?
We have the flexibility in our fund to do so within certain limits. We have not done so. Our bias will always be on publicly traded markets. There's a lot of people, a lot of funds, investors, pension funds, REITs, corporations buying direct real estate. There's not a lot of people doing what we're doing.
True. How could conditions change that would make buying actual property attractive to you?
again, it comes back to our focus on net asset value.
Yeah.
If we find that publicly traded securities are priced at a significant premium to the underlying real estate value, and we can get involved in a situation, and we won't do it on our own. We will support operating partners that have equity or skin in the game, as you say.
There you go.
And if we find that we can get in at values well below what we think that the net asset value or public markets are valuing, we would consider those. But our bias will be and has been since we have started our funds. 100% of the securities have been securities issued by publicly traded entities.
Okay. We're going to take a look at more of a focus in your business here when we come back here. We are speaking with Jeff Olin of Vision Capital. We'll continue to talk about real estate and find out why he thinks there's better value in Canadian real estate over the U.S. market right now. What about a housing bubble in Canada? What's your take? Are we getting to one?
We don't see, again, we're not, we certainly monitor the housing markets. We don't invest a lot in situations that are impacted by single-family housing pricing. But we don't see a bubble. We see true demand. We don't see a lot of speculative buying. The condo market in Toronto causes a little bit of concern to us. There's been a lot of supply in the pipeline. So far, it's held up well, but we're cautious about that and what impact that may have on the rental apartment market, for example.
Okay. Good observation. We'll wrap up this conversation with Jeffrey Olin by taking a look at some of the stocks he's bought for his own portfolio when the streak continues in a minute.